Welcome back, everyone. Welcome back to Elevate, the largest investment banking private equity hedge fund career platform in North America. Today, we're really excited to have on an incredible session here with New Mountain Capital and Steve and his team here. Before we get started, I just wanted to give everyone kind of an overview of who's in the audience and overview of how the session is going to go. About 250 people in the audience, 70% or so class of 23, 50 universities, 80 Elevate partner organizations. I'm super excited. We have 55% underrepresented diversity. And for anyone new to the platform, Elevate is the largest analyst through partner career platform for finance careers in North America. We were founded in 2020. We have on today 40 or so universities represented. As far as number of firms, we have over 60 firms represented. You can sort of see the top 30 of the most populous firms on the slide here from those firms, either incoming or current folks. In today's session, the agenda is going to be as follows. First, we're really excited to have on Steve and the New Mountain team to do the kickoff. And then we're going to have a few questions. We'll encourage the audience to ask some questions, and then we're going to have a panel on from the NMC team. And then Sarah is going to give us an overview of the talent and recruiting side, and then we're going to have breakouts. So really packed agenda, guys, for everyone. I want to introduce now the New Mountain team. Sarah, Procida, Steve Klinsky. It's been an amazing experience working with the team. Just an amazing platform, and the team's just been stellar in putting together an event of this caliber together. So without further ado, Sarah, I will have you share your screen, and then Steve, I would love to introduce you and then have you do your presentation to kick us off.
Well, first of all, thanks everybody for joining. We all look forward to speaking with you. I'm Steve Klinsky. I'm the founder and the CEO of New Mountain. And my own background a bit is I grew up in the Detroit area of Michigan, went to public schools, went to University of Michigan, got out east for law school and business school, and came to New York in 1981 as buyouts were just beginning. The 10-year treasury was 15.84%. So it's like 5 times higher interest rates than today. And there were only 20 private equity firms in the world back when I was starting. There are now over 5,000. I was co-founder of Goldman Sachs' original private equity group starting in the very early 80s. So I'm one of the kind of longest standing private equity people around. And then from 86 to 99, I was with the second largest private equity firm in the world, which was then called Forstmann Little, as part of Barbarians at the Gate and that whole type of era, and started New Mountain in January of 2000. So we're now about 23 years old. We've gone from 0 to 37 billion in assets. And I'm going to try to explain private equity to you as a career and a little bit about New Mountain. But Sarah, we're going to introduce the other folks on the New Mountain team now before I go into my slides.
We can do that. We were going to do that for the associate panel, but I think while we're doing introductions, we should have our associates introduce themselves, and then we can jump into it. And while I'm speaking, I guess I'll just also give a quick introduction on myself. Kaushik mentioned my name is Sarah Procida, but I'm in charge of our associate program here in the recruiting of our PE associates at New Mountain. Prior to that, I was at Goldman for about 10 years, focused on recruiting and an HR business partner space. So maybe I'll pass it over. I see Amanda, so maybe I'll have you kick it off, and then other associates can chime in.
Cool, awesome, sounds good. Thanks, Sarah. Nice to meet everyone. My name is Amanda Cosentino. I'm an associate on the team here. I joined last year. And before New Mountain, I was at Greenhill & Co. in New York doing M&A investment banking. And before Greenhill, I did my undergrad at UVA.
Neil, do you want to go next? I'm just going to call out names to make it a little bit easier.
Hey, everyone. Neil Corber. I'm a senior associate at New Mountain. I've been at the firm for about 3 years now, and I was at Bain & Consulting before I joined New Mountain, originally from Montreal. And when I started at New Mountain, in contrast to Steve, I think rates were around 0%. So you could have some stark contrasts between when Steve and I started.
All right, Sam.
Hi, everyone. Sam Iryami, another associate here, joined last summer. And before that, I was at Moelis & Company in New York doing investment banking for 2 years. And before that, I graduated from the University of Michigan.
Okay, and Isaac?
Hey, everyone. Nice to meet you all. Isaac Greenwood. I'm an associate here at New Mountain. I joined in August of 2021, so coming up on the 2-year mark. Previously worked at Goldman Sachs and graduated from Cornell.
Great, thanks. And I would say, just as a heads up, we're going to have some more associates join when we break out for our breakout sessions later in the evening, and we'll have them introduce themselves later. But I think we can probably get started with the overview, Steve.
All right, great. So again, thanks everybody for being here. I know a large number of you are in college, still trying to make 100% sure what your future career should be. Some of you are already out of college, but still trying to figure out about private equity. So what I'm going to do is speak for about 10 or 15 minutes before questions. And I'm going to try to give you a perspective on what I think private equity means as an industry, and then, how I think New Mountain fits into it. And my headlines for you are, I think it's a amazing industry, a great place to work, a great career opportunity. And, I think very highly of New Mountain, where we fit into it and how we're doing. But let me just talk a few minutes more generally about private equity. Along with doing it for over 40 years, I've also just finished 4 years of chair of, the industry. We have something called the American Investment Council, which represents all 5,000 firms. I just finished being a chair of it, and have been kind of a spokesman in a lot of ways. And, I think private equity has been a great career, is still a great career. And the reason is, it's not really a form of finance at all. It's really a form of business building and organizational building. And, to really simplify what private equity means is, in private equity, you and the people you work with are given a very large fund of money by your investors. And all they say is, look, you're in control of this fund, do something good and smart with it. So it's a tremendous luxury. You get to pick what industry you want to be in. You get to change the industries over time. You get to run the company without having to report out to public shareholders. You get to be involved in every key decision of building the company, but you don't have to get pinned down in day-to-day minutia that you don't want to get pinned down in. And you don't have to start. Venture capital is great in its own way, but venture capital, they expect a very high failure rate of companies. You're starting very small. Private equity at our firm, we've never had a bankruptcy. We've never missed an interest payment in the history of the firm. And we've generated over 70 billion of gains, because we can start with a good, safe base, but add all sorts of technology and venture capital upside to a base that already has some size and scale. But the main thing is, if you're saying, gee, what industry should I be in? Let's say you went into aluminum 30 years ago, you may not want to be in aluminum for the next 30 years, or you may like electric cars today, but you may not want to be in electric cars in 15 years. The great thing about private equity is, we're constantly reinventing or evolving into what we want to own. So we usually own companies for 5 years, maybe 10 years, but we're always buying new ones. So whatever is happening in the world, whatever is best and most important and most valuable to be with, we can steer ourselves into it. And we can steer ourselves into it as the owner in partnership with the management. And so you have that incredible luxury. It makes it a very intellectually fascinating career, because you're not just studying aluminum smelting. Anything is of interest. You're adding technology and growth and upside to everything. You're dealing with people in all sorts of industries in all sorts of ways. And it's one of the most fluid things. Also, compared to investment banking, which, investment banking is a great career, but there you're more like the broker selling the house. In private equity, you own the house. I mean, it's your house, you're building it, you deeply care about it. So there's a real psychological satisfaction, to owning these companies and building these companies. So that is why I like private equity. And so let me then turn to the New Mountain story, where I think we try to be the epitome of what I just explained. I mean, there's lots of ways to do private equity. I think whatever firm you join, our motto on the website says one thing: New Mountain, building great businesses. I hope whoever you join in private equity is sincerely concerned with making the business better, not with levering the business and saying risk creates return. It's not risk creates return, it's business building creates return. So just a few slides on New Mountain, and then I'll do Q&A. What you're seeing on the screen now, that pyramid on the right, is a kind of a symbolic representation of what our business is today. So we've gone from 0 in assets, in January 1 of 2000 to 37 billion. We're in 4 asset classes now, where private equity, buying majority control of businesses and running them, is the trunk of the tree of what we do. And we're raising our seventh fund right now, which will be about a 12 billion plus size fund. If we don't buy control, we have a fund to buy non-equity control. Let's say it's a 30% convertible preferred position and we can help the management who owns it build the business. We do that in what we call strategic equity. If it's a great, safe business and they don't want to sell equity, we can lend to them. We have a very large private direct lending arm that trades on the New York Stock Exchange or on NASDAQ as New Mountain Finance Company and also privately. And so we're a lender, and we also can lease people their own buildings back as a form of a loan where we're collateralized by the building. We call that net lease. So, you know, we keep building the firm over time, and these are the classes that we're in, but we try to be best in class at everything we do, both from a safety record and a return record. If you go to the next slide, please. You know, our mission statement has never changed. It's always to be absolutely best in class as measured by returns, control of risk, service to our limited partners, and the quality of the business that we build. And again, the key to New Mountain, there's two basic ideas we have. One is we call defensive growth, and the other is business building. What we mean by defensive growth is we're constantly trying to choose the industries top down that can grow for the next 10 years, whether times are good or bad. So, you know, we don't want to bet on oil prices or housing starts. We're in things like life science supplies, using technology to make healthcare more efficient. We're the biggest manager of wind and solar farms and EV charging stations. We're doing digital transformations of companies, things that should be great sectors for the next 10 years. And we really protect the downside, keep the company safe, and build the upside. Next slide, please. I won't go through this in detail, but basically, we try to buy about 10 companies a year. They usually start at what's described as mid-market. They're usually about $500 million size companies. We may use 300 of equity, borrow 200, and then we build them. So we try to build them on average, say, you know, to get the 300 up to $1 billion, but we've had a company called Avantor started at 290 million. Today is worth 25 billion. And we've made it one of the two largest companies in the world in lab equipment and life science supplies. So we're starting, you know, mid-market safe in great industries and building those businesses. If you go to the next slide. This is our track record over time. So that on the top left, you can see our compound rate of return after all fees and expenses. We've been top quartile fund after fund. That's what that kind of blue boxes mean. We've been top quartile according to Preqin, but we're now delivering over 30% net rates of return on our last fully invested fund. We're very good on cash back, which is the upper right. And what I'm really proud of, and I come from a family business background, a lot of people at the firm come from little family businesses like I do. We've never had a bankruptcy. We've never missed an interest payment. We really protect and preserve the companies and then build them. If you go to the next chart. This is our track record since January of 21. So through COVID, through the market fall, we're doing very well. We've had over 9 billion of gains. We've paid back 15 billion of cash to our investors just since January 21. We've invested 6 billion of equity. We're on a very consistent strategy. So things are going very well for us because we want to be non-cyclical and just always growing companies, whatever is happening in the world. Next slide, please. You know, what we look for, we're looking for companies that are in industries that are safe, and then we can grow them. And I'll get more into this as we go. And we have 30 operating partners on our team. We have 40 other operating partners on an adjoining team that we don't even list. We employ 67,000 people at the companies we own. So New Mountain would be about 83 in the Fortune 500 if we were one company, and we use all that strength to buy the next fairly small business and grow it. Next page, please. This is trying to say symbolically, we pick the industries we want to be in top down. We have everyone in the firm from the first day associate on up is suggesting what sectors we should be in. We vote, we discuss, we nominate, and we pick sectors. If you go to the next chart, this is a simplified version of the sectors that we're strongest in today and most active in today. And what's nice is we can get more and more strategic and more value added as we do more deals in a sector. So, you know, top left corner is life science supplies. Again, Avantor, we built from 290 million to over 20 billion. We just recently, and then we did 5 or 6 deals since then, just bought a leading proteomics company. We just bought a major piece of PerkinElmer, which is a leader in lab services. Next box over is making healthcare more efficient, running math for drug trials. Next box are big databases. Go to the middle column, digital transformation. In the center, we're managing the smart energy transition in the US. We're upgrading the power grids, the water grids, again, wind farms and solar farms. We're great at software, but we only go into the value price and so forth. So we pick sectors and we really think of ourselves as owners and builders of businesses. That's my key message to you. Private equity is not a hedge fund. You're not the gambler in the stands. You're the player on the field, and that's the fun of it. And the reason you can do well is if you're good at that, you can make money consistently. Next page. These are the logos of where some of our operating partners have worked. We have experience in all sorts of industries with top people in all sorts of industries. Next page. This is the growth of our team over time that I'm very proud of, because when I left my old firm, I had to go off on my own. I was in a rent office, and the key thing we've done for 23 years is attract the best talent to the firm, kept them, retained them, and advanced them. So, and we've had a model where our associates, if they're good, can stay on all the way to become, run the firm one day. So like my first associate 23 years ago is now the president of private equity, a guy named Matt Holt. We have many other people who've been with us 10, 15 years who've really risen up, and they're still late 30s, early 40s in their best years, and but have really grown up with the firm. And we keep adding operating skills and other skills around them to make them better. Next page. This is just the size of the companies and how we're doing. If everything we own today was one portfolio, it would be doing about 30 billion of revenue, about 6 billion of EBITDA, up last year significantly despite the bad economy and the bad stock market. Next slide. And we're also proud of the way we do it. I don't think private equity is a bad thing for the world. I think it's fundamentally, if you do it right, a good thing because it's business building. So we only want to buy businesses that are doing something good for society, or we wouldn't want to touch the business. If it's a bad business, society is going to shut it down. So we're trying to do good things to begin with, and then make those businesses better. And you get good social metrics inherently. So we've been tracking our metrics publicly since 2008. We publish them every year. We've added or created over 60,000 jobs at our companies that have any job losses. We spent about 6 or 7 billion in R&D software and R&D. We've never had a bankruptcy. We've never missed an interest payment. We've generated, again, over the 70 billion of gains. And this is company by company where we've added jobs net of job losses. We also have very formal ESG programs. We're measuring carbon capture. We're measuring, any measure that we have formal ESG reports. But we started to talk about just common sense business building many years ago before it was trendy to talk about it. Next slide. And then, again, social responsibility, we take very seriously, and we're not doing it as we don't have like the ethical fund and then the big fund. We try to be ethical in everything we do, and it's just an outgrowth of building businesses and trying to be good humans, whether or not the LPs ask us to do it. Next slide.
That's the last one.
All right, great. So let me stop there and do some Q&A, and then the main thing, you'll have breakouts with the associates. But private equity, if you do it right, is business building. Let me just make one comment. People always say risk and return go together, risk and return go together. Not necessarily. I mean, if I'm in the boxing ring with the heavyweight champ of the world, I will have all the risk and he will have all the return because he's a really good boxer. So when they say risk and return go together, the models assume there's no skill possible. The key thing is to do games of skill where skill creates return, and there is a skill to business building, and that is what we keep trying to build at our firm. So it's not taking more risk, it's controlling risk and making the businesses better. So let me stop there, and we'll take some questions and then go to panels.
Amazing. Thank you, Steve, so much. If anyone hasn't read Steve's article in HBR, we'll send it around after the session. I think it's just a fascinating story into how sort of some of their investments have done, and as well as how Steve's built the team. So before we jump to all the audience Q&A, Steve, I wanted to moderate just 3 or 4 questions that we had from the audience ahead of time. Steve, the first question is, take us back, right, to your story of founding NMC. You're coming from larger funds. What was your vision in the PE space? Obviously, you guys have achieved that and much more. So just to see the evolution of both the PE business as well as your own business, we'd love to hear your views there.
Yeah, private equity's really evolved tremendously over the last 40 years. And I had the good fortune. I was with a firm called Forsman Little from 84 to 99. It was the second biggest firm in the world, the KKR, with even higher returns. But it was just a much quirkier industry back then. So Forsman Little is the second biggest firm in the world, had 8 people working at it. There were the 2 brother founders, the Forsmans, who kind of came and went. I was the senior deal guy. We had younger people, and we had more people flying the Gulfstream jets and the helicopters than working at the firm. And Ted was dating Lady Di. So it was all very glamorous and very kind of dysfunctional and quirky. So I went off in 2000 to start New Mountain. And the idea was to build, it's called New Mountain because not that we're mountain climbers, we were trying to build something with permanence and upward movement and, the symbol of a mountain. And, to be focused totally on the mission statements never change. It's to build great businesses. It's to control risk and make things better and build a team and an institution that works together in a really healthy, intellectually honest way. Everyone in my firm gets equity in every deal from the receptionist on up. People, there's always clear team leaders, but people try to support each other. It's a good, healthy culture, and to build a firm of that spirit. And it's frankly gone much better than I ever would have predicted it to go. But those ideas of business building, defensive growth, flat, non-political culture have been there from day one.
Amazing. I think that definitely resonates with everyone here. Steve, I wanted to ask you something more fun and interesting. Can you comment on if you have a favorite deal or transaction that you've been part of and sort of why that stood out to you?
Yeah, well, I've kind of gone from claiming to be the deal maker on the field to the CEO trying to lead the institution. When I was, in my more deal making days in the 90s, there was a company called General Instrument that we took from $1 billion of value at Forsman Little to close to $20 billion. It developed the 1,000-channel cable system. It developed video on demand. It led the way on internet modems along with Intel. It was the first all-digital television standard at a time when people thought Japan was going to conquer every company in America. So I'm very proud of that one as a deal doer. At New Mountain, I'm proud of what the team has done, the way we built the team and the way the team has done things. And, we've had lots of great successes. So we sold the company literally 2 weeks ago called Signify. As the market's terrible, we took it from 500 million to 8 billion. That was last month. The year before we had similar ones. So we have a lot of great successes, but Blue Yonder, we wrote the article about in Harvard Business Review, because we took a very boring company, made it the world's leading supply chain software company with artificial intelligence and all that. But it's not me doing it, it's the firm. So I'm just so proud of the firm. And I love where the firm is going.
Amazing. Thank you, Steve. Sarah, I'll take a few questions from the audience, and then obviously we have way more stuff tonight. So we have sort of the panel and also the breakouts. So I think lots more to do. So for the Elevate sort of professionals and students, guys, just you could do a quick name, school, firm as relevant, and we'll kind of keep everyone moving. Jagger, I think I saw your name on first from NYU. Do you want to go first?
Yeah, absolutely. First off, thank you so much for taking the time to speak. My question for you is, what do you think kind of makes a successful analyst or associate at your firm? What are some things that you've noticed over time that are key for kind of standing out, performing well?
Yeah, we take our associate recruiting extremely seriously. That's one of the reasons we're all on this call tonight. And when we're interviewing an associate, certainly when I'm interviewing an associate, I assume they can run the computer and stuff. I'm really looking for somebody who could run the whole firm one day or just be a superstar in the long run. We're not looking for short-term, computer service. We're looking for people with judgment, with gauge, with creativity, with good culture, with everything else. So that, and as far as what helps you succeed throughout your career, the first day out of college or the first day as an associate or out of business school is going to be you're going to be handed a large set of tasks that other people have set. And a lot of it gets down to processing power and being able to, be a good person and get a lot of stuff done. As it migrates, it's more and more what you yourself invent to do. What industry should you go after? Can you convince the CEO to sell to you and not the other person? You have the judgment to tell something good from bad. So your skill sets, everything's fractal, but it starts with a lot of ability to handle work that's assigned and turns into a very free-form creative process where, again, you have a fund of money, and after that, it's up to you to do something great with it, ultimately. So, but we're looking for all those skills on day one because we don't want to force people out. We love that people stay or go to business school and come back and just rise with us.
I'll just add one more thing, because Steve alluded to, we really take the long-term view on our associates. And, one thing that I thought was really cool about New Mountain when I got here was Steve actually makes a point to meet all of our associates in the recruiting process. And along with our CFO and our president, I think that's a real testament to, what we're looking for in terms of our culture too. Like, it's not just like, can you do a model test or something like that? It really is long-term view of, will you be an investor here long-term? So I think that's a cool thing.
And let me also, this is true of private equity in general, but I think very much of our firm. So again, we do 30 billion of revenue. We employ 67,000 people. We're kind of a giant organization. But if you work at New Mountain, it feels just the opposite. We're basically all of the investors are on one floor in one building. We have another floor for conference rooms and support staff and stuff, but everyone's near each other. We line up, lunch is brought in 3 days a week. We're all, the secretaries, the partners, we're all just waiting in line for lunch together. I have breakfast with all the associates once a month, tell them what I'm working on, like I would with my most senior partner, and they tell me what they're working on. But we're also about 10 yards from each other or 10 feet from each other. So, what's great about private equity, it's so small. It's the feeling of a family business running these companies privately, but with the skill sets and sophistication of a giant organization. So it's the best of the old family business model plus the big corporation model combined. And it's a pretty special place to be, like on the the bridge of one of these places, which is where our associates are.
That's great. Thank you, Sarah. Thank you, Steve. We've sent a handful of folks right to New Mountain, and everyone's just spoken so highly of their experience there. So, just a tremendous platform, for everyone here is looking at career options in the future. So thank you, Jagger, for that question. Let's go to, I'll just go in order here. Tanu, do you want to, we've quite a few, I know, NYU questions today. All right, Tanu, why don't you go next?
Hi, Steve. Thank you so much for taking time in your day for this. I am a final year economics student here at NYU, and I'm wondering, where do you see your firm and the rest of the private equity landscape going within the next 2 to 5 years?
Yeah, so, I think we have these fundamental principles. I've said to people, if we have a nanotechnology on Venus 200 years from now, I hope it's going to have New Mountain kind of DNA in it, which is protect the downside, be best in the world at what you do, create a lot of value in a high quality way. So whatever our product set is, we have, I think, the lowest default rate in credit. We have great returns. I mean, we're trying to be best in everything. So we're in a great shape now. As you saw, our returns are rising. Our team is getting stronger, and we just continually evolve. We try to constantly be better than we were the year before as a firm. And so, we hope to buy about 10 companies a year. We slowly evolve our industry set as the world evolves. I mean, we're studying, generative AI very, strongly now to figure out how that should adjust the models we go after. We're constantly trying to be where the world is going or help the world get to the right place, but in a very consistent kind of smooth evolutionary way.
Thanks, Steve. Good question, Tanu. Yeah. And I think the track record that Steve pointed to, right, since 2000 and his, prior background as well speaks for itself, because the world's changed so much in the last 23 years, right? And just the ability to, perform over time is really a testament, to the team as well. And that's, I think, what everyone here should look for in firms that they think about over their careers, as someone who's able to adapt through different, market cycles and still be at the top, top performer in all of this. So thank you for that question. Keith,
let me give, if I can, one other really big picture thought to all of you. You just think about your life and all that. I mean, there are 8 billion people in the world, and they all get up every morning trying to figure out how to make their lives better, improve things wherever they are. And whatever is the state of the world, there are always pockets of positive innovation happening, somewhere in the world. And what you can do in private equity and what you can do with your own career is choose which of those positive pockets you want to get involved with and help accelerate that positive movement. That's why I think it's a great career, and that's why it doesn't fall out of fashion. You didn't pick one idea that could get obsolete. You're just constantly moving and accelerating the world in the best possible ways. That is what private equity fundamentally means. It's not about capital structure to me.
Great life advice. Great point, Steve. Thank you. Thanks for that question. Keith Cotter, do you want to go next?
Yeah. Hey, Steve. Thanks for for coming on and speaking. Saw a lot of university students here, so I figured I'd throw some private equity associate questions in the mix here. But yeah, so I'm at a lower middle market private equity firm. I was just wondering the biggest challenges that you've faced kind of going from that execution deal making role to your current, leadership, ownership role of a private equity firm.
Well, someone said to me, Steve, does your life get tougher as the firm gets bigger? And I said, no, my life gets easier. So I am thrilled. No one's happier than me to be able to, instead of stuff that I had to do, the biggest challenge was 23 years ago. If there was a problem, the accounts receivable department in some little company, I had nobody to help me. We have incredible people now who can handle these things much better than I can personally. So I'm just happy to walk around going, thank you to these teams that are, I'm trying to do pattern recognition, and I'm here every day, and I'm trying to make sure all the ships keep sailing in the right direction. But it's easy to move from, the line to supervision because, it's just trying to make sure everybody has what they need going in the right place. And I just love the place and love the people we recruited over the last 23 years.
Thanks, Steve. Great question, Keith. I think we'll go, we have maybe three, 4 more minutes in this sort of piece. So we'll try to get through some of the other questions that are there. Umit from Columbia, do you want to do your quick question?
Yes, thank you. Thank you for being here, Steve. I appreciate it very much. I'm a senior studying political science at Columbia. My question real quick was just, how has the way you approached investing changed as your career progressed?
Well, in the very early 80s, when inflation was super high, the market was super low, private equity was LBOs. It really was all about leverage. It's who had the nerve to borrow a lot of money. I say it's 4 investment bankers in the room borrowing a lot of money. And what's evolved continuously over many years is to think about private equity, the way I'm trying to describe it to you, as not about borrowing money, but about having a governance structure of running businesses with more attention and skill than they would be in any other way, and more rationality and more ability to the team. So that has been a 40-year transition. I'm trying to get the whole private equity industry to mirror that idea. I think more and more people are. I'm trying to get the political opponents of private equity to understand it's evolved in 40 years, and it's not Michael Douglas with a giant phone on the beach in Wall Street or whatever they think it is. And but that is the essence of my speech to you guys today.
Thank you.
Thanks, Steve. Wilhelm, I think we'll have a couple more minutes. Wilhelm, do you want to do it quickly, and then I'll try to get Maggie and Aaron in.
Sure. Thank you, Steve. First of all, you mentioned you've been in the business for around 40 years. And, during that time, there's grown from 20 to over, I think you mentioned 5,000 private equity firms. And with that comes a lot of, competitors to you. How do you see yourself really differentiate yourself when you're approaching these targets compared to some of the other bigger firms out there?
Yeah, where we do, I went over this chart very quickly, but one of the charts when I was talking about how we pick sectors also had a little bullet about how half the time we're finding a company before it's for sale at all, because on every one of these sectors I talked about, there's a team within the firm running that sector with multiple deal partners, operating partners, younger people. So half the time we're finding the business before it's for sale. 86% of the time, the seller's keeping stock in the company after we own it. And where we really do well, we look at 1,000 companies a year, assign 1,000 confidentiality letters a year to buy 10. And the 10 that we buy are generally where the seller really believes we can build the business better into the future than some other firm who would pay the same price. So they want to be part of that. They like our vision. They don't want to be absorbed by a big strategic buyer. And we've never had a bankruptcy. We have incredible references. We have incredible value-added plans, and we're better and better in these sectors every year. So we distinguish ourselves on our vision for the business after we buy it. And we try to then, once we're the chosen buyer, we try to match price, but we're not just bidding against our own fears.
Thank you.
Thanks, Steve. Great question.
Sure. Thanks for taking time, Steve. I go to Berkeley, and I'm supposed to be incoming at Credit Suisse, but we'll see how that shakes out. So I was wondering, I know going into investments, you guys usually go in with an exit strategy. I guess in this environment, I assume you pivot strategy over the term of investment just based on macro factors. So do you have any thoughts on, navigating uncertainty in your investments in this environment. And then maybe for me and any other CS folks on the phone, you know, advice on navigating uncertainty in career.
Yeah, well, first of all, on Credit Suisse, we have wonderful friends at Credit Suisse, and a lot of people, I have great personal friends at Credit Suisse, and a lot of people at our firm came from Credit Suisse. And I hope they treat everybody well. And the best case would be if UBS and Credit Suisse puts together a super team and is smart enough to keep all the good talent and build around it. So I hope that they'll do that. They say they're going to do that. I hope they do that. As far as exits, you know, when we do our normal computer models, we usually show a 5-year hold period. We try to use an exit multiple that's consistent with what the true DCF of the business is, that's consistent where the multiples have been even in bad markets. And so that's kind of our standard analysis as we go in. And then what actually happens is, you know, you make opportunistic decisions as you go. So if a buyer shows up in 3 years who will pay you a huge price, you don't wait 2 more years, you take year 5 price in year 3. If the market is really low, you're more likely to be buying with fresh money and maybe you don't sell as much that year. But I showed you, we've returned 15 billion since January 21 because the market has been very high until recently. And, you know, we made some great exits. And even when the market's bad, if your company's desirable enough, like I just explained, Signify got sold at $8 billion a month ago. If it's a good enough company that's growing at a great rate, no matter what, there's always somebody who wants to own it, either the strategic buyer or the big sovereign or somebody. So, you know, we do well in all environments, but obviously there's better environments to sell and better environments to buy.
Thank you, Steve. Steve, thanks for taking all these questions. Audience, great job on asking really good questions. And obviously, you know, Steve, you know, you're the expert, so you've handled these questions amazingly well. So, Aaron, we'll end with you.
Hey, Steve, appreciate your time, you and your team. My question for you is, with everything that you've done with as far as value add and everything, do you have a particular industry that keeps coming up every time during your analysis where you think like the greatest risk reward play is there?
You know, I showed you those 9 boxes on that one page of sectors. We actually have 12 sectors staffed up with 25 subsectors, and every one of them is very good. And we don't force any deal to get done in any sector. So our investment criteria is always 2 questions. Is it safe? Will we get our money back with close to a double, even if the world goes bad, is question 1. And question 2 is, do we really think we can make a 30% gross IRR or better by whatever we're going to do with that company? If we meet it, we'll buy 2 companies in the same industry in the same week. And if we don't find it, we won't buy any company in that industry for 20 years. I mean, so we don't change our criteria, but we're hunting. Those are the fishing holes we're fishing in, or those are the hunting grounds we're hunting in, and they're all very good. We've obviously done great in life sciences, great in healthcare IT, but all of those boxes have been very good for us.
Amazing. Great question, Aaron. Steve, thank you so much. Sarah, I will kind of pass it to you. I think we're now going to do the associate panel. We've got on all our amazing associates, Neil, Sam, Amanda, and Isaac. So we have questions for them. But Steve, I think you know, the heartiest of thank yous from our team. I think all of the you know, professionals and students here for just sharing all your wisdom and advice and really the vision behind, you know, what is, you know, one of the top firms in the world that you and your team have been so successfully built and sustained over time. And I think that's the sort of the most amazing part. So Sarah, I'll turn it over to you, but Steve, thank you so much for doing our keynote.
Thank you everybody very much for making time. I appreciate it.
Yeah. Thank you, Steve.
Thank you, Steve. Yeah, so I think we can head into the associate panel. We prepared a few questions that we thought we would kind of hit on the most commonly asked questions that associates get. So I think we can go through a few of those, and then, you know, I think depending on the time, we can either open it up, or we also want to save time for breakout rooms with the group. So I think our associates that are doing the panel, they already did their introduction, so I think we can jump right into it. Should I, Kaushik, do you want me to ask the questions?
Yes, sir. I'd love for the audience to get to know you as well. So yeah, if you don't mind, you could do this.
Okay.
Piece. Yeah.
Okay, perfect. So why don't we start out with Sam? If you could kind of just walk us through sort of the day-to-day at New Mountain and what do you enjoy about it?
Yeah, sure. So I'd say no day is the same, and I know that's pretty cliche to say and hear, but really every day is different. And you know, the way to think about it is probably splitting up your time between new deal work and new sector work, as well as current portfolio company work. And, it does differ in terms of, what you're doing on a day-to-day basis, and each, with each task and also, each week. But overall, the way you should think about it is between those two kind of overarching themes. And on a new deal, think about it, you're bringing, it might be a really fast process where a banker's involved and you're bringing a company to the firm, trying to get, the full team here at New Mountain on board with underwriting a transaction at a specific price. So you're constantly doing diligence and updating everybody on your key findings, as well as understanding the market that they play in. So there's a lot of work that goes into underwriting a new deal, but it's not like you're doing that, every day. Definitely depends on the stage of the deal that you're on. And then on the portfolio company side, I think it also depends on kind of how active it is. For example, I work on a pretty active M&A portfolio company that we plug in, pretty frequently on finding new transactions, whether it's underwriting them, integrating them, or figuring out the strategy for the next one. And so it really just depends, and your time will be split based on where you are in the year. I'd say, just like as an overarching theme here at New Mountain, is every associate here does really have a big part on the team. Everyone here, we have a voice, you have an opinion, and you're definitely encouraged to give that opinion in both your internal deal team as well as to Steve at your monthly breakfasts. And so just think about it as, it doesn't really matter like kind of what you're doing on a day-to-day basis, as long as you're contributing to whatever effort that is required at a given time. And it may be finding that next sector that Steve alluded to in our sector initiative process. It may be finding the next great platform, or exiting a platform, or partnering with a company on M&A. So it really does differ. And I know that there's a lot of people on the phone that are in college, and also in the real world in banking or consulting. So just, happy to take it offline, but I think the tasks definitely differ on every single day.
And I would say, kind of on that last point about having a voice, even at the junior level, I think you'll probably hear that from a lot of firms, but it really is very, very true at New Mountain. I think that's like one of the biggest takeaways that I had. I think as new associates join, one of their first comments is like, wow, that is really true. And, I think that's just something I wanted to stress, because I think it's something that's important when you kind of step into this role. You do have a lot of that responsibility kind of from day one, and people care about and want your opinion for sure. So Amanda, let's hop to you. I'd love for you to just talk. I think Steve hit on this question, but it would be good to get your perspective on what you think makes a successful associate at New Mountain.
Yeah, definitely. So some key things that I think are important for being a successful associate here. Definitely, first of all, just kind of having a good overall investment judgment that you can build over time too with your teams, but just like good initial views and investment frameworks. I think also really important is having a genuine kind of interest and eagerness to learn. New Mountain's generalist, and you're going to be working on a lot of different industries. So I think that having kind of that genuine eagerness to learn across industries with different teams, different types of investments is really important, and helps you a lot when you're doing diligence. And another thing that's important, that's different than I would say when you first come out of college and you do banking or consulting, is being more proactive on your teams. Because you have such, you're contributing a lot to your teams, your role is important. It's really important and kind of adds a lot of value to the team when you're being proactive in terms of thinking of a certain person, expert to reach out to answer certain questions, or thinking one step ahead and getting set up for what you might do next in a process. And I think really just another thing, probably the last thing I'll talk about now, is just speaking up and really voicing your opinion. I think that is super valuable for your team. So yeah, happy to elaborate on any of that, but I think those are 4 key things that are important for the associate role.
Thanks, Amanda. So Isaac, the next question I have is for you. And maybe if you could just speak to some of your biggest learnings on the job, you know, when coming from a banking background into New Mountain.
Yeah, thanks, Sarah. So I'd say coming from a banking role where it's much more transactional focused, you know, one of the frameworks that private equity really does a good job in instilling it as an investor is just how you analyze new investments, right? So whether it's having like a checklist of, you know, how do we think about the market? How do we think about the business model? Is it defensible? Things along those lines. So you can, you know, to Steve's point, go through 1,000 new opportunities a year and really like make well-placed bets in that, you know, we're not just trying to put money to work, but it's really make like strong, thoughtful investment opportunities in areas that we know well. So it's picking up things like pattern recognition and developing that framework, I think is a really great skill set to develop, you know, especially in your early to mid 20s when, you know, you have a long runway in your career. And I think stuff like that, you know, goes a long way, both professionally and personally. So.
Thanks. So Neil, I think we probably hit on a few different things when it comes to culture at New Mountain, but if you don't mind kind of sharing some of the things that you love the best about the firm, that'd be great.
Yeah, sure. So when I was first going through recruitment, like I'd say there are a few unique attributes to New Mountain. A lot of what people have said already on this call that really stood out to me, and it definitely holds true today. One is definitely like for a very large fund, I was thinking you'd go, I'd probably get lost in the mix, but it's like a very, very flat culture at New Mountain. So when you're going through recruitment, you're probably going to meet with Steve, and he meets with generally everyone that receives an offer at New Mountain, Matt Holt, who's the head of private equity. And just from day one on the job, you're invited to every single investment committee. So whether it's your deal or any other deal, it's like really like an open door policy where you could walk into the room, you could join via Zoom, and you could really listen to all the questions that people are asking about an investment. And that's just so interesting for someone in their early, mid, late 20s to see what all the key questions are for a specific company that a group is bringing to the firm to try getting investment in. So I think that's really interesting. And then I think Amanda was saying this as well, but you are expected to have like a voice from day one. So on one of the deals I was on, Catherine, who's going to be joining shortly, and she's going to be in one of the breakout rooms. We were looking at a pet supplements company, and both her parents happened to be vets. So during our investment committee, she brought up specifically, oh yeah, my mom has given these supplements to her patients, and this is the efficacy, and she thinks this is the differentiation. And people at the firm, Steve and other MDs, were specifically asking Catherine questions like, what do you think of this based on your experience? So you really are expected to have a voice from day one. And the second thing is just New Mountain's very entrepreneurial. Once again, for a pretty large fund, it's a very entrepreneurial place. And just one example is when I started at the fund, we bought a company called Acolyte, which is one of our current portfolio companies. I'm Canadian, and I'm like, you know what? I'm going to try finding companies to potentially add on to Acolyte. So I just went to go tell Procida and Nikhil, who were the deal leads at the deal leads for Acolyte, and I said, let me just go find some Canadian companies to potentially Acolyte to buy. I stumbled upon a company in Alberta. They said, great, this looks interesting. They put me in, like, we reached out to the founder, built a relationship with them, met them in person, and then we ended up buying the company. So you really feel empowered from day one to just be entrepreneurial, think like where you can add value. Like at Steve's point, like we're trying to build better businesses. And then, you know, you really feel empowered to go do this. So going back to just Sarah's original point around culture, it's very tough from the outside and sometimes to figure out what the culture is of a specific firm, but definitely try probing on this because it really does make a big difference on what the culture is of a firm, what they're trying to emphasize when you're trying to think about like what your long-term career is.
Thanks, Neil. So Sam, next question for you. If you had to pick like one or two of your favorite aspects of the role, what would it be?
Sure, it's tough. I'd say the first, I was in banking before, and you know, banking is very transactional, like Isaac alluded to, in the sense that, you know, you may be staffed on a project for 3 to 6 months, get to know a management team, get them ready to sell. Once you sell the company, you know, that relationship kind of ends and you kind of move on to the next one. here, I think one of the key differentiators in private equity is when you get to know a management team, whether it's at a portfolio company, an existing portfolio company, or a new deal, you are trying to build a relationship with them for 3, 5+ years. And so that aspect of the job is definitely different than in a transactional role, and something that's a little bit more nuanced and allows you to, differentiate your experience. Because, if you have a really good relationship with the CEO and CFO of a company, it can really make or break a lot of analyses that you're running and a lot of viewpoints that you have on a specific deal or situation. And so building those relationships is definitely unique and something I've enjoyed. And I guess, secondly, I just think the amount of, can't emphasize this enough, but the amount of runway you have as an associate here is definitely, much larger than in my prior role, at least, and probably larger than other firms out there, just in the sense that we're set up as, obviously we have a $10 billion fund and 40+ portfolio companies. So there's really a lot for you to do across the 25 subsectors, and you can be entrepreneurial and take on new initiatives of your own. You can join others. You can pick up one day and say, hey, I want to work with this new team, and find yourself on a new deal very quickly. And so just there's always a lot to do, and it's kind of what you make of it. So you can kind of control your own destiny, and I really like that about it.
Thanks, Sam. So one more question on sort of culture, and then we'll hit on a couple of recruiting specific questions. So Isaac, this one's for you, but if you could talk a little bit about how New Mountain kind of supports you in sort of the training and development of your career.
Yeah, definitely. So I think, it's impressive for as large as a firm as it is now versus when it was founded 23 years ago. There's, more than enough responsibility and work for everyone. Like, even on day one, when you join the firm, like, everyone is plugged into work streams, and, really you have the opportunity to ramp up with your teams and, step up as a newly hired associate. On top of that, we have a great mentorship program. So everyone has junior and senior mentors, all the way up to like senior MDs to junior VPs. So that's built in, where you'll have monthly or quarterly check-ins, go out to dinner, stuff like that, to just make sure that, your continued development is ongoing. And then the other thing that Sarah and I are involved with is we have an ongoing training team. So throughout the year, when you join, you do 2 weeks of, like a crash course in PE. And then throughout the year, we have ongoing development and training sessions where we'll bring in external folks like lawyers and accountants to teach on advanced topics, just as people continue to ramp. And, that's been a great way to just, again, like, continue developing the skill set.
Thanks, Isaac. That was a layup, because Isaac really runs the lead on all of our training for our associates. So just a couple of recruiting questions, because I know that's probably top of mind for people. So Neil, if you could kind of talk through some of the key decision points to think about for people who are thinking about recruiting in the somewhat near future.
Yeah, so I'd say I probably didn't do this the right way when I was recruiting, and I'd say I'm happy to speak to people about this in our breakout sessions as well. But 3 main factors, I guess, when recruiting. One is you should actually care about location. So when I know when I was talking to headhunters originally, and they said, where would you like to go? I was like, Boston, San Francisco, New York, Toronto. I was very open, but thinking about it, I was doing long distance with my now fiance. We both love, like, we're huge foodies. We both love New York City. Like, find a city where you think you could actually build a long-term career, build a life for, rather than if I was in Boston, I'm sure 6 months in, I'd realize that I didn't know a single soul there. So like, really try thinking about a location that you think you could build a career, and either have a good network, a good support system. I think that's very important. 2, we spoke about this a lot over the call, but just the investment strategy. If you're thinking about private equity, there's not just one type of private equity. You could go like to a New Mountain type of private equity, which is really growth focused, how to build a better business. But there are some funds out there that really trying to maximize leverage and trying to just find the cheapest deal possible. There's other deals that are even earlier than New Mountain and doesn't have a management team, and they're trying to do like a full roll-up strategy of an industry. So figure out like what's important to you, what's most exciting to you, talk to different people in the industry, and then figure out what's like the strategy that you think is most aligned to your interests and skill sets. And then the third thing is just culture. So talk to a bunch of people at the firm before you go there. Everyone will say that culture is good. Hopefully you can figure out that New Mountain is the best, but in all seriousness, like just try getting a good sense of like what the culture is of the firm and the people that work there. And if that's like an environment that you think you could really thrive. And maybe the last thing 5 years ago when I recruited, I did on-cycle. I think that's a little different today. I think you could do on-cycle. There's some off-cycle paths as well. At the end of the day, firms like New Mountain is really trying to get the best candidates, irrespective of when the cycle is. But Sarah could probably speak to exactly timing for 2023, 4, and beyond.
I will hit on that probably last. So one more question, and then I can hit on that. I think Amanda, as you were thinking about the recruiting process, what types of roles or firms were you thinking about in addition to New Mountain as you were embarking on this search?
Yeah, definitely. So luckily I had a year to kind of think about what I wanted to do after banking, because on cycle is a year later. So luckily I had like some good time to think about it. And I think the best way to kind of go about it is I always knew I wanted to be an investor in some capacity. And I think kind of taking that year to figure out what was the best way was really helpful. I was always realized that private equity would be a good fit in terms of kind of the work style and the thought process and the investment framework fit best for me. And then from there, you kind of narrow it down into, do you want a big strategy? That super mega funds doing huge buyouts, or more middle market that could be more strategic and you could be more involved, or, go somewhere smaller too. And I think I just took the year and talked to people who come from different strategies, different types of funds, and realized that I really wanted kind of a generalist middle market, upper middle market fund. And New Mountain was kind of the perfect alignment with that. So I was really focused on that particular, those types of funds, upper middle market, New York focused, and definitely more of kind of like a building, business building mindset instead of just pure financial engineering.
Okay, thank you, Amanda. So I'll just give kind of to wrap up this session, I think a lay of the land on kind of where we are with recruiting. I know there are probably going to be a lot of questions about that, so just want to get ahead of it. And I think there's probably two different questions. The first, I would say, for all the undergrads, people who are thinking about it in the next few years, I think the biggest question for you to really think about it, Neil hit on this, is sort of on cycle versus off cycle. I think that's like the in addition to kind of what firm and strategy you want is the timeline. I want to kind of give a quick plug because I think things are changing. It used to be everyone just sort of recruited in 24 to 48 hours and we're done with it. And we're definitely seeing that shift, which I think is a good thing for all of you so that you can all be really thoughtful about what you want, where you see yourself long term. And so, New Mountain historically has participated in an on-cycle process. And so we will probably plan to do that to a certain extent again for people who maybe have decided to hold out for a year and then recruit for 2024. And then, or, people that do feel ready and want to go. But I think that there's going to be a big population of people who have maybe just graduated or just in their jobs. And it's really too soon, and we recognize that. And so the thing that I could stress to all of you is don't rush into any decisions. Take your time. I think New Mountain, and I've seen this from a lot of other firms, we're not planning to fill our whole class through an on-cycle process that happens in the span of a couple days. Neil said it, but we're focused on hiring the best people for our associate class, for our firm, and we're not focused on hiring them as quickly as we can. So hopefully that kind of gives you some assurance of not to try to stress too much. We will plan to hire in the off cycle as well for, onward 2025. Don't worry about reaching out to CPI yet or anything like that. This is really just meant to be educational. And, trying to kind of help you guys educate you and arm you a little bit more to make these decisions. So I think with that, Kaushik, I think we should just break for the breakout rooms. I know we're going to maybe give some more Q&A for the group, but just conscious of time,
Yeah.
we should probably switch to the breakout rooms now.
Yeah, I agree with that. Okay, so everyone except for the New Mountain folks, just New Mountain folks, hang tight. You're all be in this room. Everyone in the audience, this is your opportunity to really get to know the team, ask whatever questions you have. You'll be in smaller groups of about 30, 40 people. And so we'll go ahead and break out into 4 breakout rooms now, and then New Mountain team, our team will assign you guys just in 30 seconds. So everyone, you can feel free to turn on your cameras if you're able to, and then ask sort of the questions of your panelists. So